Hello everyone and welcome to today's session, Month End in Sage 50 Payroll. My name is Sarah and today I'm joined by Duncan, who will be keeping an eye on the Q&A panel. So if you do have any questions as we go, feel free to pop them in there and Duncan will try and pick up any questions as we go along. So we're going to start by working through your month end checklist, which will involve producing the P32 report, and when required, submitting an EPS or an employer payment summary to HMRC. So what we'll do is we'll have a look at what that report contains, and I'll explain when and how to send an EPS when it's actually required. We're then going to take a look at reconciling reports. So we're going to be suggesting some reports that you can compare to just to ensure that your payroll records are accurate and correct, and also how to see a breakdown of any P32 figures as well. I'll then finish with a section on employment allowance, so running through the eligibility, which did change this tax year, and the steps to claim employment allowance, as well as a process of claiming that each month by reducing your P32 liability. I'll then wrap things up by taking a look at some further support and plenty of time for questions at the end as well. So let's get things started with the P32 and employer payment summary. So these 3 points make up the main elements of our month-end checklist. So these are the tasks that you would complete once you've actually finished your payroll. You've updated records for all pay dates within your relevant tax month. So the 3 steps, so you would run your P32 report, and what that's going to do, that's going to break down your liability and what you actually need to pay over a HMRC. You would then submit an employer payment summary, only if it's applicable, and I'll explain a little bit later when you might need to do that. And then last but not least, you want to ensure that you make your payment of tax and NI to HMRC by the payment deadline, which would be the 19th of the month if you pay by cheque, or 22nd if you pay electronically. Now, when I'm talking about month end in the payroll world, we are referring to tax months. So they begin on the 6th day of the calendar month. Therefore, they're going to end on the 5th day of the following calendar month. Now, if you've got a monthly payroll, that is pretty clear when you've completed all your pay dates within the tax period, because once you run that one monthly payroll, that's your one and only pay date within the tax month. But if you run a weekly, fortnightly or 4-weekly payroll, you do want to be a little bit careful and make sure you have actually completed all pay dates that fall within the tax month before you go ahead and run your month-end tasks. So for example, today we're going to be working in tax month 7, so that's October tax month. That started on the 6th of October and will end on the 5th of November. Now, if I've got weekly paid employees and they're paid on a Wednesday, for example, I need to ensure that I've completed all of my pay dates within month 7. So if you just have a look at the tax calendar there, just on the right-hand side, so that would be the 8th, the 15th of October, the 22nd and the 29th of October, as well as the 5th of November. So that does fall into the current tax month, but obviously the following calendar month. So that's why you just want to, it's just something to watch out for if you are on a weekly based pay frequency. Now, if you want a copy of our handy tax calendar, you can download it from the Help Centre, and that does give you a really easy way of checking what pay dates appear in which tax month. But if you download the handout today, that'll be a clickable link that'll take you off to our Help Centre where you can download or print out the tax calendar. So before we go into a demonstration of the steps, do you want to just go into a little bit more detail as to what you'll actually find on your P32 report? So here's an example of a P32, and there are now 23 items you can see on this report. So let's start just from the top. So the first 4 items show you the total pay-as-you-earn income tax deducted from the employees within that tax month. It'll have the total of student or postgraduate loans that have been deducted, and then the net income tax being a total of those two, and the gross national insurance being the total employee and employer NI contributions. Now, all of that information is going to actually be submitted to HMRC as part of your full payment submission that you'll do each and every time you pay your employees, whether that's monthly or weekly. So that is going to make up the bulk of your liability to HMRC. Now, other items on the P32 relate to adjustments in the liability. So looking further down, item number 5 is any employment allowance that you're claiming in the month. I will talk about that a little bit later on towards the end of the webinar. But if you've claimed employment allowance, you'll see that being deducted until you reach the annual limit for that employment allowance. So that's £10,500 this tax year. So it has went up quite a bit this time round. And then under your employment allowance, you're going to see any statutory parental payments that you're eligible to reclaim. Now, just a quick note, statutory sick pay cannot be reclaimed from HMRC. That is fully funded by employers. But any statutory parental payments, so the likes of maternity, paternity, adoption pay, that's either going to be able to be reclaimed at 92% if you're a standard employer, or if you do qualify for small employers relief, that would be 108.5% of the amount back. So that will be shown on the P32. And if you've selected the small employer relief setting, you will also see the NIC compensation value on there as well. Now, the other potential adjustment to your liability is the payment of any apprenticeship levy that you need to pay over. Now, this is only going to apply to larger payrolls, so payrolls that have a pay bill of more than 3 million per year. And again, that is calculated automatically on your P32. So nothing particular on this example. And once all of that is then taken into account, that's going to leave you with your total amount to pay over to HMRC. Now, the tax, the national insurance and student loans are all going to be reported in your full payment submission. Now, the other items that we looked at there are going to require an EPS to be sent. So what that looks like does depend on the situation. In the case of employment allowance, one EPS is sent when you claim it at the start of a tax year, usually, and that covers you for the rest of that tax year. So that claim is only sent once a year. But for the items that you've reclaimed or apprenticeship levy that you might need to pay, these are reported at the end of each month as part of an employer payment submission. So those are the items that you would see on an EPS. So your EPS would only be required if any of those following points apply. So if you're recovering statutory payments, if you've suffered CIS deductions, you report an apprenticeship levy that you need to pay over, or if you haven't paid anyone at all on your payroll, so you don't have any employees at all, no one's getting paid, then you do want to inform HMRC of that using your employer payment summary submission. But it might be that you're thinking none of those apply to you for that tax month. Then if none of those apply to you, everything HMRC already has already been sent in your full payment submission. So you wouldn't actually have to send an EPS at the end of the month if none of those points apply. But as you'll see in a second on our demo, if you are recovering a statutory payment, that's probably going to be the most common reason to send this. The EPS is required to submit the values that you've recovered for the entire tax year. So it is always going to be a running year-to-date submission as well. So that's a little bit about the P32 and the EPS. Let's dive into a little bit of a demo of those two steps. I'm just going to bring these slides down. I'll jump into my payroll. So first thing I'm going to do is I'm going to check my last updated and my last FPS date. I do have a mix of monthly and weekly employees, but as my weekly employees are paid on a Friday, the last Friday of this tax month would also be the 31st of October. So I can see that my last updated date, my last FPS date, everyone is all up to date for this current tax month. Now, the first thing I'm going to do is I'm going to run my P32 report. There are a couple of different places that you can run the P32 from. So if you are in your payroll tasks, you can get your P32 from your quick links, or you can get it from reports and period end folder as well. So you can see I've popped it in my favorites. I'm just going to run it from my quick links for now. And that will load up with my criteria. So I'm going to be running it for tax month 7. You can see here I've got my P32. Now my company is actually eligible for employment allowance, but as we're already in month 7, I've actually used up all of my allowance now for the tax year. You can see I've also got someone on maternity pay as well with the NIC compensation. Now I've run my P32 report. If I go into my company and in the settings, really good way to keep a track of things like employment allowance is by checking the HMRC payments tab. So when you run your P32, this will automatically populate any figures in here. So you can see it's now pulled through my amount due and my employer NI for month 7. And I can see in this tab here that I've used all of my employment allowance in months 1 to 5. So it might, raise a bit of a flag that there's no employment allowance on there. If I did want to double check that, I could just come into my HMRC payments tab, make sure it's all been used up. A really good place for keeping tabs on things. I'm going to go quickly back to my details tab. Now I did, as you've seen on my P32, do have someone on a maternity payment at the moment. Now I am eligible for small employers relief, and I do have that box ticked as well. So you can see it has in fact put the NIC compensation on there for the small employers relief. And if you're not 100% sure if you're eligible for that, you are eligible if your total class 1 national insurance, so that's employee and employer, was 45k or less in the tax year prior to the qualifying or matching week. But if you do have someone going on a statutory payment, my recommendation would be just to double check that eligibility before you start processing, just to make sure that that additional percentage gets added automatically. So because I'm eligible for small employers relief and I do have someone on a parental payment, what that does mean is I am going to have to submit an EPS to recover that statutory payment and my NIC compensation. So I'm just going to close out of my company settings. I'm going to go back to my payroll task. Now, again, there are a couple different ways I can submit my EPS. So I can, again, do that from my quick link. So you can see employer payment summary right there. Or I can do it from my e-submissions option, just over on the left-hand side here. So I'm going to go into my employer payment summary. Now it's the first option that is applicable to me. So I'm adjusting my payment to HMRC because I am recovering statutory payments. I'm going to select that first option. You can see I'm in tax month 7. And I can now see I have my maternity pay in there with my NIC reclaimed. Now, that doesn't match what's on the P32, but that is correct. And the reason why is your employer payment summary is a year-to-date submission. So this is going to be any maternity pay that I've processed from April up until month 7. So that can throw a couple of people off, but it's totally normal to do that. And it will always be a cumulative value that you'll see in here. So I'm just going to go ahead and get this submitted. And once that's submitted, I'll then be able to check that in my e-submissions log. So that's my APS all done. If I go into my e-submissions log, again, still in e-submissions, I can see now I've got my APS. And if I click on more details, it's going to tell me exactly what it is that I've submitted through. And I can also print that off if I need to as well, and if I want to keep a little bit of a paper trail of that. Once that's all submitted, then your final step would just be to make that payment over HMRC by the 19th or the 22nd if you pay electronically. We'll run through a little bit of a recap on that. So we have went in and ran our P32. We've used our employment allowance. We did have an employee that was on statutory maternity pay, and I did have my eligibility for my small employers relief already flagged. I've then went into my employer payment summary, and that first option that's applied to me, I have sent my EPS because I'm recovering statutory payments. Now, with your EPS, just something to note with this, you do want to submit that by the 19th of the month in which the tax period ends. So I've done mine today with my process date as the 31st of October because I've completed all my payroll, but the deadline for that would be the 19th of November. Not to worry too much if you do miss one, as it's a year-to-date submission. So say maybe I'd been on holiday and I'd just forgotten to do one. I didn't get back until the 25th of November. As it's a year-to-date submission, when I do my next EPS, any values that weren't submitted previously will be submitted on that more recent one. So try not to worry too much if you do forget to do one, it will be picked up as long as you submit it next time. So the EPS will always submit your year-to-date values, and that will then be used by HMRC to adjust your amount due that's in the current period. So next thing I want to take a look at is just some reconciliation at the end of the month. Now, this is totally optional, but it is good practice to reconcile reports just on a monthly basis. It just really gives you the opportunity to pick up on any mistakes early on. So I will suggest a few reports that you could use for reconciliation, but I have again linked on the handout. So if you do want to look at some more reports, it will be linked on the guidance as well. So the main reasons for doing reconciliation is checking that your pre-update reports match the information that you've actually physically went and updated in your payroll. And it also helps provide breakdown of totals on your P32 report. So a couple of reports I'll talk about today is your payment summary 1 and your payment summary 2. So those ones are your pre-update reports. I'm then going to take a look and compare them with the payment summary history reports. So those are the ones that you would run after you update your records. And then we can also link that back to the P32 report as well. So let's get jumped back into payroll for a demo on this section. I've got all my payroll updated, I've got my EPS sent, and I've generated my P32. So I'm going to run my payment summary history reports because I want to make sure that what I've run on my pre-update stage matches what I've now got on my post-update stage of the process. So first thing I'm going to do is I'm just going to check my criteria. It is important that anyone that's been paid in the period is included. So I'm going to go into criteria just up at the top. Now, I do have on hold employees selected. I'm going to untick them. I'm going to keep my historical leavers ticked. That won't matter because that's going to only exclude anyone that's been paid in a previous year. Ones that you want to be careful of are these three, so on hold, on holiday, and current year leavers, because you do want to make sure you're including everyone in these reports. I did have one employee on hold, but they've not been paid since June anyway, so that shouldn't make a difference. But I am going to clear and swap and highlight everyone. So now I've got everyone highlighted. I'm going to go into my post-update reports, just this option here up at the top. Now I do have mine favorited, so my payment summary part 1 and part 2. But if you don't already have them favorited, then you can find them from the employee folder, just down the left-hand side. I'm just going to go down here. It should be in alphabetical order. And they're just after the P45 details. So you can run it by employee as well, but I'm going to run it by date. What that's going to do is that's going to give me a breakdown by processing date. So because I've got a mix of weekly and monthlies, then that's just going to give me a breakdown for each particular pay period in my tax month. So I'm going to go and run my payment summary history part 1. I'm going to preview it for now. I'm going to do that for the tax month. So I'm going to do that for the 6th of October to the 5th of November. I want to include all payment periods. I'm just going to press OK. Just make that a little bit bigger. What you can see here is this report will give you a gross to net breakdown, and it will have totals for each process date as well. So you can see here I've got my weeklies broken down into process date. Now, because both my weeklies and my monthlies were paid on the same day, so the 31st, it has grouped them together for this final one. But it will give you totals for each particular process and date, and it will also have a grand total for the period at the bottom as well. You can export this, you can save it as a PDF. Totally up to you what you want to do. And then what you can do is you can then compare that with the payment summary part 1 that you've run before updating your records. But I'm just going to close that down for now, and I'm going to do the same with my part 2. So I'm just going to go ahead and preview that. Pop in my criteria for the tax month. And again, this will do the same thing, but for your NIC information. So you can see it's broken my process date down. I've got my NI information and some pension information on here. I also do have some handy information on the right, so things like tax code, if they're on a week 1, month 1 basis, what their NI category is, and if their contract is out as well. I've also got my totals, and I've got my grand totals at the bottom for my entire month. What I can do now is I'm just going to pull up some reports I've had saved earlier. So as I was processing my payroll, I've saved my pre-update reports. You can see I've got my part 1 and part 2 for week 29 for my weeklies. I've got a part 1 for my weekly and my monthlies for the 31st of October. And a part 2 as well. Now I've saved and already exported my payment summary histories, part 1 and 2. So what I can do now is I can reconcile this with what I have saved at the time. So say there was something I maybe wanted to check for my weeklies in week 29. And what I can do is I can go down look at my payment summary history. So this is what is actually being updated in payroll. You can go down to tax week 29. I might want to check maybe the taxable gross for that period. If I go on back to my pre-update reports, see my taxable gross, 101250, matches exactly what is in my historical reports. So that means everything's matching. I'm happy. You can also check on my grand totals. So the grand totals for the entire month, I would maybe then be comparing with my P32 as well. So if I maybe look at pay as you earn, that's 2603.20. And we've got 2603.20 there. So again, that's matching. That means I don't have any corrections to make in this pay period. Now, it might be that there's come some times where you look at your pre-update versus your post-update reports and they're not matching. In that case, what I would then be doing is seeing where the differences are coming from. So is it in tax? Is it in NI? Is it one particular person or employee that's not matching? And from there, once you identify the difference, you can then make the correction. So you could do that maybe with a rollback or a restore or a recover. But we do have some great webinars on mastering mistakes, so definitely check those out on the webinar page if you get a second. It's another quite handy report I did want to show you as well. Just going to close that down. Is we do also have a P32 payment summary reconciliation report. So if you do want to reconcile your P32, this again is in your period end folder of your reports. I'll just preview this. You can use this for the entire month 1 to 12, or you could maybe look at one month in particular. And this will also help you in reconciling which employees have which liabilities against your P32. So there are quite a lot of different reports that you can be using in your payroll to help reconcile and make sure there's no errors that are going to occur, or if there are any errors, at least you're going to be catching them nice and early. So that's it on reconciling reports. So the next thing I wanted to talk about is employment allowance. So employment allowance, so eligible employers are going to be able to reduce the employer NIC by up to 10,500 each tax year. So that is quite a big jump from last tax year. It was only 5,000 last tax year. You can claim if you're a business or public body and you do less than half your work in the public sector, such as local councils or anything NHS. You can also claim if you're a charity or if you employ a care or support worker as well. You do your application by submitting the EPS for the claim, but I will show you a little bit later on how to do that. Now, exclusions do apply for employment allowance. Most people will be eligible, but I do just want to cover some exclusions. So that's public bodies or businesses do more than half the work in the public sector. Companies with one director who is the only employee liable for employer NIC. That would be if it is just a sole director, no one else on the payroll. Now, from April 2025, employers paying more than 100,000 in Class 1 NICs can actually apply for employment allowance. Now, this is another thing that changed this tax year, and it does mean that it opens it up to a lot more employers as well. Other exclusions apply if you're a group of companies or if you have more than one pay as you earn reference. So let's now take a little look at setting that up and how you would actually claim employment allowance as well. Now I'm just going to jump back into payroll. I'm going to do is I am just going to jump into a company that doesn't have employment allowance applied. So remember, I have used my employment allowance for this particular company. But now I'm in a company that I actually haven't applied for employment allowance for. Now, again, we are in month 7. So ideally, you do want to do this at the start of the tax year. Reason being, if you do it at the start of a tax year, that just means you can start reducing your bill straight away. So I'm going to go into company, just in the bottom left, and I'm going to go into settings. Now, if you're not 100% sure if you're claiming it, then best thing to do is just come in here and check. If you haven't sent your application off for employment allowance, this box here, just in the bottom right, will be greyed out. So it doesn't actually allow you to tick for your eligibility until you've sent that off. So what I'm going to do is I'm going to apply for EA. And again, this is a different place where you would do your usual EPS. So you would do it through company settings rather than your e-submissions. Now, state rules don't actually apply for this tax year, so I'm just going to select not applicable. And I'm just going to go ahead and submit my EPS. Now, it is going to look different from, when you claim a statutory pay. It will just have a yes marker on here. I'm just going to go ahead and submit that. And once this is submitted, HMRC won't actually notify you if you are eligible, but they will get in touch if you aren't. So now that that's all sent, because I know my business meets the criteria, I'm just going to go ahead and tick the box. As you can see, this message will pop up just as a little bit of a heads up. So they no longer send a confirmation letter. If your claim's rejected, you will receive an automated message from HMRC within 5 working days. So as always, if you're not 100% sure if you are eligible, it is always best just to speak to HMRC directly and confirm your eligibility. So now I've got my eligibility ticked for my employment allowance. This means now when I run my P32 report, it will calculate the employment allowance I can claim. However, we are in month 7. I have applied partway through a tax year. Now, payroll is always going to calculate the amount from month 1. So if I ran my P32 for month 7, the employment allowance won't be correct. What I want to do to figure out how much I've actually already overpaid by is I want to run my P32 report from month 1. So I can go into payroll, go to P32 report. Do that months 1 to 6. So I haven't paid my bill for month 7 yet. And I'm just going to make that a bit bigger. So you can see should have been given £6,672.60 so far. So that would be the amount that I've overpaid so far. If I go then in my company and in my settings, if I now check that HMRC payments tab, you can see it's actually generated those figures in there now. So I can run my P32 for month 7. However, because I've already overpaid in months 1 to 6, I am going to want to manually calculate and carry forward whatever value to reduce my next bill. Once I'm caught up, and I haven't had any overpayment, that's the point where my P32 is then going to be accurate. So remember, if you are claiming mid-year, your employment allowance will always start from month 1. So you do want to look retrospectively just to find out how much you've overpaid. You would then manually calculate and carry that value forward and reduce your next bill. Once you're caught up, that's the point where your P32 is going to be more accurate. So I do just want to run through a little bit of a recap of that. So what we've done is we can check line 5 on the P32 and 22 just to see what is left to pay. You can keep claiming until you've used the full allowance, which is the £10,500. And you can keep track of that within your HMRC payments tab in your company settings. Now, maybe it's the first time you're hearing about employment allowance. Good news is you can actually claim retrospectively for previous tax years as well. So in terms of that, you can claim £5,000 each year between April 22 and April 25, or £4,000 between April 21 and April 22. However, do remember that the 100k threshold does actually apply for those tax years. So it is best to double check if you're eligible. If you're not 100% sure, always best to double check. So let's jump back into payroll for one last demo for today. So if you are claiming for a previous year, this will go off your processing date. So the first thing you want to do is you want to change your process date. So going into payroll, change process date, and you want to change that to the last day of the tax year that you're sending the application for. So I'm going to change that to the 5th of April, 2025. So I just need to claim for last tax year. And I'm going to do exactly the same as I've done in my current year. The only difference is I've got a different processing date. So I'm going to go into company and into my settings. And you can see now I've changed my process date back into last tax year. That box is now unticked and greyed out because I didn't actually send any application for last year. So I'm going to apply for EA. I'm going to go ahead and submit that yes marker over a HMRC. Now, HMRC will get that yes marker. They will know that I'm eligible for the last tax year as well. Now, obviously, all payments would have actually been made to HMRC for last tax year. So if you contact HMRC, they're then going to be able to arrange how to deal with the refund. So it might be that they put a credit on the account, or it might be that you can use that to offset against any other liabilities. But you are eligible to get that money back. So if you have missed any previous tax years, don't worry. It is just a case of sending the claim for that year and then contacting HMRC to arrange how to get that refund or credit applied to the account. So that's it for the demos today for month end. I did want to wrap things up just by running through a little bit of further support. So we do have a few upcoming webinars. So we do have a maternity pay webinar on Friday, and then some about starters and leavers at the beginning of November. But if you download the handouts, you will be able to click on the link and get signed up for those. The Help Centre is a really great resource, so you can access it by clicking on the help icon in Sage 50 Payroll, or you can access it via the web by clicking on the link. You can get your technical support guides on there. You can get our recorded on-demand webinars on there and information on how to get in touch with our technical support team if you need to. I also did want to shout out Sage University. That is a really great resource. So you can do anything from bite-sized bits of learning to full certification. So you really can do it at your own pace. If you click on the link, so sageu.com, it is totally free to set up your account and have an explore. So I'm going to stick around for the next few minutes just to give Duncan a hand with any questions that might have came through. So I'll pop on to mute for now, and I will see you all shortly to wrap up the session. If you are leaving us at this point, you might see a short survey when you exit. If you do have a couple seconds to fill that out, your feedback is really appreciated. But I'll pop on to mute for now and give Duncan a hand, and I will see you all shortly. Hi again, everyone. I hope you've all enjoyed today's session. I will close the session down in the next minute or so. As you exit, you will see a short survey. If you can take a moment to fill that out, your feedback is really valuable to us. I would love to hear what you thought, what worked well, what could be improved, so we can keep making these sessions even better for you. You will also receive a follow-up email later today, so it'll have a link to the webinar recording and information on how to register for any future sessions as well. But thanks again from me and Duncan for joining us today. Hopefully we will see you all again soon, but it is bye for now.